Welcome back. Today we're going on a deep dive. You sent over some research reports about the future of energy and commodities.
Right.
So we'll unpack what's happening with oil and natural gas metals, even coal.
Okay.
And the interesting thing is, despite all the talk about green energy, these reports are suggesting we might be in for some surprises when it comes to commodities.
Yeah, you're absolutely right. These reports paint a much different picture than what you're hearing on the news. Let's start with the shale miracle that's been touted as the answer to our energy needs.
Okay.
The data suggests this miracle is fading a lot faster than anyone expected.
Interesting. I always thought shale would be a major player for decades to come. Why is it declining?
It's depletion. Shale wells deplete a lot faster than conventional wells. Companies drill the best spots first, and as they drill less productive areas, output declines. We're already seeing it happen in places like the Permian Basin. Production growth has slowed down dramatically.
So the U.S. might not be the energy powerhouse it was expected to be. What's that mean for the global oil supply then?
That's the big question if shale production can't meet demand. We're looking at a global oil supply crunch sooner than anyone thought, and it's not just shale conventional oils, and conventional oil discoveries have been declining for years.
That's a little concerning. What about those big oil companies, the super majors like Exxon and Chevron? Aren't they investing in new production?
They are, but it's not enough to offset the decline in their existing fields. Their production and reserves are shrinking, even though they're spending more. And here's a fascinating detail from one of the reports. Saudi Arabia's oil reserves might be way overstated.
Hold on, the Saudis, they're supposed to have huge reserves. If that's not true, that changes a lot of assumptions about global oil supply.
It does. It shows we might be underestimating the challenges. And there's another thing putting pressure on oil production: ESG investing.
Right. I've heard that term, but can you explain what it means for oil companies?
ESG stands for environmental, social, and governance. It's investing that prioritizes companies doing well in those areas. A lot of funds now include ESG factors in their decisions, meaning oil companies are under pressure to reduce their carbon footprint. This often leads to less investment in new oil exploration and production.
So it seems like oil production is getting squeezed from all sides: declining shale output, shrinking reserves, overstated estimates, and pressure from ESG investors. It's a pretty serious situation.
It is, and it shows why you need to look beyond the headlines and really dig into the data. Now, let's talk about natural gas. The U.S. has had cheap natural gas because of the shale revolution, but that might be about to change.
Really? I thought we had tons of natural gas. What's happening there?
Like shale oil, a lot of the big shale gas fields in the U.S., like the Marcellus, are almost at peak production. We're seeing signs of it in the production data.
So are we going to see a natural gas shortage in the U.S.?
Yeah.
The country that basically invented fracking?
Yeah. It's a real possibility, and here's where it gets interesting. U.S. natural gas is trading at a huge discount to its energy equivalent price in oil. That's not normal, historically, and it could change fast as the market tightens.
So you're saying there's a chance for investors who understand this?
Exactly. The natural gas market's changing, and there could be big opportunities for those paying attention, but let's not forget about renewables. A key part of that is copper.
You're right. Copper is essential for electric vehicles, solar panels, wind turbines, all kinds of electronics. Are we facing the same challenges with copper production, though?
We are. Copper demand's booming, especially in China and India. Their economies are growing. They're investing in infrastructure, and at the same time, we've got depletion issues with copper mines. The grade of ore is declining.
Meaning
Companies have to process more rock to get the same amount of copper. That drives up costs, right? Lower ore grades mean higher production costs. And we might not have enough copper, but there's something interesting that could change things.
Okay, what could change things for copper?
New exploration technologies, they could help us find lots of new copper resources. For example, there's a technology called Typhoon. It helps companies find copper deposits deep underground that we couldn't get to before.
So we're not actually running out of copper, we just need to find better ways to get it. That's good news. But I'm curious, with everyone focused on renewables, what's happening with coal? It seems like no one wants to use it anymore.
It's true. Coal has a bad reputation, but it's still important for energy, especially in countries that don't have much natural gas or reliable renewable energy. And here's something to think about. The coal industry hasn't had much investment for years because of environmental concerns and the push for clean energy.
Yeah.
That means there hasn't been much investment in new coal mines and infrastructure.
So if demand for coal goes up, we could have a supply shortage, like with oil and natural gas.
It's definitely possible, and it's interesting because In the past, when commodity prices went up, coal stocks were often the best performers.
That's surprising. Most people wouldn't think of coal as a good investment now.
It shows that the best opportunities are sometimes where no one's looking.
Let's talk about the bigger economic picture, inflation. It's been a big worry for investors and consumers. What did these reports say about inflation and commodities? Good question. Inflation's been high, and it's hurting a lot of people's buying power. Could commodities be a solution?
Historically, commodities have done well against inflation. They tend to perform well when money loses value. And here's what's interesting. Commodity prices are really low compared to things like stocks and bonds.
So you're saying commodity prices could go up a lot, and that could help investors protect their money from inflation?
Exactly. And there are historical examples of this. The market now looks a lot like times when commodities were undervalued in the past, like the 1920s, 1960s, and 1999. All those times were followed by big increases in commodity prices.
That's something to think about. It sounds like commodities are worth paying attention to. But what about gold? It's usually seen as a safe investment. How does it fit in with inflation and commodity prices going up?
Gold is interesting. It's done well even with interest rates going up and other investments doing poorly. And there's an important idea to consider: the gold-oil ratio.
I've heard of that. Can you explain that?
The gold-oil ratio tells you how many barrels of oil you can buy with 1 ounce of gold. It shows you the relative value of these two important commodities.
Okay.
In the past, extreme values in this ratio have signaled big changes in the global monetary system.
Like when the gold standard ended in the 1970s, that was a huge change.
Exactly. And the gold-oil ratio now is getting close to levels that suggest we could see another big change in the global monetary system. We're also seeing central banks around the world buying more gold, which supports this idea.
So we could be seeing a major shift not just in commodity markets, but in the whole global financial system.
That's what the data suggests, and this leads to another important factor: the U.S. dollar.
Yeah, the dollar's the world's reserve currency, but there's been talk about its future. What do you think?
The dollar's power has been weakening, and there are a few reasons for this. We're seeing more use of other currencies for international trade. There are worries about U.S. debt levels, and geopolitical changes are challenging the dollar's position.
So are you saying we could see the dollar lose its place as the world's reserve currency? And what would that mean for investors?
It's a possibility that investors need to think about. If the dollar becomes less important, it would have a big impact on global financial markets and could make commodities more valuable. This raises an important question: are investors ready for this possible change?
That's a lot to take in. It shows how important it is to stay informed and be open to new ideas. But before we talk more about what this means for investors, let's take a quick break. We'll be right back to discuss how you can prepare for these changes. We've talked about oil, gas, copper, gold, but we can't forget about food. What are these reports saying about agriculture?
Agriculture is facing some tough challenges. Global grain supplies are at their lowest point in decades, and we've seen food prices spike in recent years. Food security is a growing concern.
That's worrying. What's driving these food prices up?
There are a few things. First, the world's population's growing, which means more demand for food. Second, people in developing countries are eating more meat and dairy, which need more grain to produce. And third, climate change is making it harder to grow crops in some places.
So you get rising demand, changing diets, and environmental problems. It's a complicated issue. Are there any solutions?
There's no one answer, but we can do a few things. We need to grow more food with things like better crops, more efficient farming, and new technology. We also need to waste less food, and we need to find ways to farm that don't rely so much on fossil fuels and chemicals.
Sounds like it'll take a lot of effort from different areas, technology policy changes, and even individuals.
You're right. It's a challenge that needs everyone to work together and come up with new ideas, but there's a lot of exciting work happening in agriculture. Things like vertical farming and gene editing could help us feed more people in a sustainable way.
That's good to hear. It seems like everything we've talked about today, energy, metals, agriculture, is changing rapidly. It's hard to keep up.
It is, and that's why it's important to stay informed, question what you hear, and be willing to think differently.
So what's the most important thing you want our listeners to remember today?
The world's changing in big ways, and these changes are creating both problems and opportunities. You need to understand these trends and be prepared.
That's great advice. Don't be afraid to think for yourself. Do your own research and be open to new ideas. The future belongs to those who can adapt and embrace change.
Well said. And remember, the best opportunities are often found where others aren't looking.
Thanks for joining us on this deep dive into the future of energy and commodities. We hope you found this discussion helpful and interesting. Until next time, keep learning, keep exploring, and keep asking questions.